I'm Charlotte McLeod with investingnews.com, and here today with me is Craig Tindale. He's a private investor, a Substack newsletter writer, and he has 40 years of experience doing business in Asia. Thank you so much for being here. Great to have you.
Great to have you too. Nice to
really
be
good to really good to be speaking with you. I know that your writing's been getting a lot of traction online. I'm sure many members of our audience will be familiar with you already. But I thought before we get started, if you could give me a brief introduction to yourself and your work, that would be great.
Okay, yeah, I guess I spent 40 years in Asia, as you mentioned, building systems and doing business, mostly for American companies, but a few Australian companies as well. I was in China in 81 and, some of the Middle Eastern countries shortly after that. And basically I went backwards and forwards and built businesses for American companies before, I guess tech existed. Mostly in tech companies, I've built central banking systems, import, export, supply chain, trade systems, just about everything you can imagine, right across telco, government, and various other industries. So yeah, it's been fun, but now I bring a kind of systemic system thinking point of view to most things. And it seems to be reasonably popular because what I'm trying to do is provide a mechanical lens so people can see for themselves rather than all this ideology that we get, in the marketplace at the moment. It's less about, the politics and more about, where do we really sit?
Yeah, I think clearly your writing is resonating with people, and we're going to get into some of your thoughts today. The post that I saw of yours that really prompted me to reach out was about the impact of a closure of the Strait of Hormuz. Obviously, that's really on everybody's mind right now. And you go into the cascading impacts on a wide variety of industries. I thought we could start by looking at that. And I know oil right now is the most obvious one, I think, that's on everybody's mind. I wonder if you could talk a little bit about that and the impact that could have on inflation. I think that's top of mind for a lot of investors at the moment.
Yeah, I think, I put a 12 system model into, on Substack. And I think it's probably useful to read it because it goes into a lot more detail than I'm going to go through here. But basically, 20 million barrels go through the Straits of Hormuz every day, and that's a lot. But that's a secondary issue to the amount of LNG, the amount of sulfuric acid, the amount of helium, which sulfuric acid and helium have a short shelf life. I think it's about 45 days. And also all the things that go into plastics, all the things that go into synthetic fibers, just about everything you can name is going to be impacted by this. And the reality is that has a huge drag on the global economy. For instance, there's various numbers going around, but sulfuric acid, is used in, and LNG is used in fertilizer production. There's not one number I've seen, 25% of fertilizer production is impaired. And, that goes straight into, because it's not all evenly geographically distributed where they deliver to. Some areas will have enough capability to build fertilizer, and other areas like Australia, for instance, one of our major sulfuric acid urea production facilities is having 2 or 3 months off to rebuild after an energy issue they had. And so, we were probably going to import our fertilizer, and we have to scramble. So when you sum all these things up, Taiwan is dependent on, I guess, consistent supply of LNG to build all their fabs or their for the fabs to operate. And unless you can get, very precise voltage and amps delivered to these fabs, they'll have to close down too. And the startup is horrendous, because what folks don't realize is, once you close down some of these production facilities, the startups are non-trivial. They take hours and hours and hours and hours of thinking, but months and months and months, or even years of implementation. We can close one with a decision, but with to open one, I'm trying to say is, can be a multi-year process. So we close down faster than we open up, and so we're balkanizing our supply chains. What this does is, related parties tend to help each other. Like Australia hasn't got much diesel storage, but we've got a hell of a lot of coal and gas. So we're trying to trade our coal and gas for diesel. It becomes a kind of barter regime at a country level. And that kind of, I guess, running about or trying to, plug holes is really what the world's doing at the moment. The Americans have got a lot more LNG than they used to have. They've got a lot more oil than they used to have because of shale and Venezuela, etc. And you've got China, who is a lot more dependent on the Gulf than probably the US is. So you're watching kind of geopolitical struggles right out of the box. And, with the hierarchy of intel that we've got versus what's really going on, we can only guess why a lot of these decisions are being made, as crazy as they might seem to us at the moment.
Yeah, I think definitely right now there's a lot that we don't know. I wonder if we could talk a little bit more about the fertilizer impact, because we know prices are higher. There's restrictions from China that are coming into play right now. How do you see that progressing further down the chain when it comes to food prices and that sort of thing?
Well, it's a sequencing thing, isn't it? If we can't get enough LNG, if we can't get enough of the chemical substrates that go into fertilizer production, we can't make as much fertilizer. That goes into the planting seasons that cycle around the world, which are just about to start in the Northern Hemisphere, which then cycle into lower yields, which then cycle into lower production, which then cycles into higher prices. And inflation, and the reality is that inflation is very different to what our central banks look at. We look at, most of our central bank policy is on food inflation that's created by a demand, not food inflation that's created by scarcity. So in Australia, we raised interest rates because we were afraid that inflation was catching hold, and it's kind of nonsensical, because people are not only struggling to paying higher diesel and higher fuel costs and higher food prices, they've got to contend with higher mortgage costs as well. And that's where our system's broken to a certain extent, was we're measuring inflation purely from the price point of view, not the cause point of view. And that's a big insight.
The other point that you write about that I want to hone in on is sulfuric acid. So you talk about the impact on copper and cobalt. I wonder if you can talk, for those who might not be familiar, about where sulfuric acid comes from and how significant the impact could be for both of those metals, which of course are key in a variety of industries.
Well, let's start where they're key. I've done some work on predicting the demand profile for all the critical metals, including copper. And, I think Robert Friedland has pointed out that we're going to need 6 major copper mines going into production every year for the next 10 years, and we've got 1 or 2 at best. So we're making these castles in the sky about, we're going to build all these fabs, we're going to build these data centers, we're going to build AI. AI is going to take over the world. Elon came out the other day and said that we've got 2% of the production capability for chips, for fabs, than we need. 2%. That means we have to go up by 50 times. And so we've got this kind of sequencing or triangulation of demand from, electrification. There's about 80 million kilometers of street cable required over the next 10 years. And, that turns into 1 to 3 tons of copper per kilometer. That's a lot of tons. Then you've got, some of these new hyperscale data centers require 50,000 tons of copper per unit. Then you've got the reality with, people like Siemens who are building transformers. They've got a 5-year backlog for transformers. So you can't even build the electrification for a lot of these stuff. To add to this, let's get back to your sulfuric acid. Sulfuric acid is absolutely central in copper refining and a whole other bunch of metals refining. So we talked about fertilizer. Now we can't get the sulfuric acid to make the copper that we need anyway. So, it's all becoming a logjam. In Canadian terms, it's literally a beaver dam, and it's not one that we can unpick very easy. So we've got a lot of the AI gurus talking about, what will be, the number of job losses or what they'll be capable of in the next few years. And the reality is we've got a physical constraint. The idea that Moore's law can keep doubling, but, Einstein laws can keep up is a nonsense. And so we have a reckoning coming. And the reckoning is that in 1973, there was a book written, a report written by what they called the Club of Rome, and they basically used an extrapolation of a computer program to show that the limits of growth would eventually intersect each other. We would run out of stuff to keep expanding our economy at the way it did. And it was basically rubbished from 1973 on. But their prediction was that in 2025, we would run out of stuff and that we would reach our limits to growth. Now, that work was checked every decade or 2 decades. You can look up the limits of growth and you can find the updates that different academics use. But it was a fairly quiet kind of update. It exploded on the scene in the 70s and then everyone forgot about it. Well, here we are. And we didn't predict that we were going to manifest these shortages the way we have, because I guess, being able to visualize that is very difficult in 1973. We didn't know what all that stuff would encompass. But that's where we've reached. We've reached the limits to growth, either through, rivalry. China, refines 50 to 98% of all metals and chemicals and other things, or we just can't open the copper mines fast enough because we're not discovering it fast enough. Now, the good news is we've got a lot of technology coming, but the bad news is it will come slower than we would want.
Well, let's talk a little bit more about copper and AI, just because you were bringing that up. So copper is pretty tied into the AI story. We've been going through this boom time, but it sounds like, so we're hitting this physical constraint right now. How do you see that playing out for all these AI companies and the boom that we've been seeing? It sounds like maybe that's not going to be continuing.
Well, Elon said the other day, if you really listen to, if people go and find the podcast where Elon is drinking a beer with the podcasters, I think it's a dark beer. I forget what that's called. But just so you recognize the one to listen to, he basically predicted that all the people that are building AI at the moment have never built anything in real life. He's built Tesla and a SpaceX and now his robot company. So he's been very aware of the limits of supply, and so he's built a lithium refining company, so he does his own lithium refining, and he's built a nickel refining company, right? And so all the others have no capability to bring these metals into a usable space. They haven't got the bill of materials to build what they plan to build, and they've got no experience in that, so they haven't foreseen those build out limitations. And like at the moment, he used the example of gas turbines being booked out till 2031. You can't buy a gas turbine to power an AI data center. So there's this huge kind of train wreck coming where you've got organizations like NVIDIA or AMD who are going to build these new chips. Like with NVIDIA, it's the Rubin chip, and then it's the Ultra Rubin chip, and then it's the NASM chip. And all of these chips use significantly more rare earths and critical metals and copper than the ones previously. Like I did a bottom-up forecast of all their new technology and worked out they were going to be using 256,000 tons of copper per annum just to build their chips in 2028. So you've got all these kind of intersecting demands for copper and rare earths, like tantalum. The total tantalum production of around the world at the moment is 850 tons. NVIDIA and AMD in 5 years will need 1,000 tons by themselves. So I guess it's an easy thing to grasp when you go, okay, how long does the physics of these expansions take versus the expansion of their ideas? Their ideas and their designs and what they can prototype is different to what they can actually build because they don't have the bill of materials to do it.
So do you think these big companies, is it their responsibility to be looking down the supply chain and thinking, all right, I should be investing in a copper mine or a tantalum mine, et cetera, or how do you see it?
Well, I think Elon's ahead of the curve as usual, and he's actually doing it. He's building vertically integrated structures. I think that goes for countries as well, and you can see that happening at a country level. We're going to have to build vertically integrated structures, and in our free market stateless capitalism model, that's hard to do. I think the nature of capitalism only became free market in the late 70s. Before that, we had Eisenhower, and way before that, we had Alexander Hamilton in the US genre, where we built logistics change at a state level. But the modern vernacular has state capitalism as socialism or communism. I think that's going to change. I think we're going to see state capitalism is that the state has a role to play to support the endeavors of the society that it manages, and there's a sovereign purpose. It's all very well to send your iPhones to Foxconn in China to build, but if you do that with solar panels, or if you do that with defense weapons, or if you do that with power plants, you lose that resilience. You lose that ability to act on your own and to ensure the freedom and liberty and good standing as far as the environment your community enjoys. You lose that as soon as you start relying on foreign powers.
I think we've seen, at least in the US recently, there's been efforts to bring more things into the country. We're seeing fast tracking of different mining projects, etc. How are you looking at that? Do you see those efforts as positive? Are they doing enough? Is there something that's missing from the plan there that you would mention?
I think what's missing is scale. Yes, we're bringing some refining projects online, but it's only happening in the US, and to a small extent, it's only happening in Australia or Canada. From a copper perspective, thinks it's a geopolitical fight. the prime minister there is thinks all the small states have to join together. Really, he should be focusing on the resilience of the economy to produce its own stuff vertically. So I think it's happening at a company level, it's happening at a country level, but it's not happening at scale. The other part of it is it's being attacked, and there's no good policy measures in there at the moment. The policy measures that they've got doesn't protect them against price warfare. At the moment, a Chinese copper smelter is paying a bounty to the the copper miners of $50 to $100 a ton. So the copper miner gets paid money to send their smelting to China to get the business. Where, in South Korea, where there is a perfectly good refiner, they're charging the copper miners $75 a ton. And so then they're losing business and they go broke. And if you go back in a granular sense and over the history of our refining capabilities right across the West, they were all price attacked by China, and they were all sent broke. And why does the Chinese do it? Well, they've just got the common sense to know that if they can control these inputs, then these imaginary foot races between American AI or Western AI and Chinese AI disappear, because we might have the chips, but we're not going to be able to build the data centers to keep up. And so what you saw this earlier too, in the mainframe through distributed computing wars, way before your time. In my younger years, I used to sell mainframes, okay, and they were kind of a monolith model. A central mainframe would feed all these dumb terminals information, and the main compute would be centralized. Now we're seeing a kind of a new form of this argument, where you've got all these frontier models building these massive data centers, and I think Dario, the Anthropic CEO, said everyone will have access to a country of geniuses. The problem is most of our life applications for AI, we don't need a country of geniuses. We don't even need a genius. We just need somebody that's an AI that can do the job. It might be an insurance job, it might be an accounting job, but it doesn't need a country of geniuses. And that is better left from a latency perspective, from a technology perspective, at the edge. Edge computing says, I wouldn't be surprised to have our own AI engines on our desktop right next to us in 3 or 4 years. And that takes a lot less copper and rare earths to do that than it does to put a monolith AI in an 800-acre, 5,000-acre data center complex. And so what will happen because of these shortages, and it's happened in every other era as well, is that we will migrate to the easiest solution, or the most common sense solution given the constraints. And so we'll end up with AI, but it may not be these frontier models. We may my wife has 10 horses, and she uses her AI to record all the medical history of her horse, her stables, and how many injections they get, and the veterinary checks and all that kind of stuff. Now, that doesn't take a country of geniuses. She never stops talking to the thing because she's found it very, the utility of it is awesome, but she doesn't need a country of geniuses. She just needs a system that's going to record the veterinary, background of 10 horses. And so what is happening is there's a thing called a build it and they'll come mindset to application development and product development. And some of the great disasters in history of product development is build things that we think everybody needs, and then people decide they need something slightly different that costs a lot less. And that's my prediction with AI. You build a product specific for the requirements of the customer. You don't build products because you assume the customer wants to talk to a genius all the time. And so I think it'll take some unexpected turns, like most eras do. Like everybody, when I was in the mainframe era, everybody thought the mainframes were going to be, the thing forever. And it turned in a few years with, people, companies like Apple and Microsoft.
Yeah, certainly technology can take different turns depending on what ends up happening. I want to ask you a little bit more about pricing. I think when people look at China, they often think, well, it's really hard to undercut in terms of pricing because they do things so cheaply over there. And in terms of metals and for other products, I've heard this for lithium and maybe for other metals as well. People talking about, well, maybe we decide that we'll pay a premium for lithium that's produced outside of China. Do you see that kind of dichotomy emerging as the situations where we're talking about progress?
Well, it has to emerge if we want to remain independent. It won't emerge if we don't remain independent. And I'm on the fence about that. I don't know whether we remain independent or not, or if this is some kind of this is kind of some longer evolution to a different system. Because clearly our free market system has got some shortcomings. You look at silver, for instance, highly critical to all of the electrification and all the AI data centers, right? There's about 9 tons of silver in any AI data center. Where the current market is, we're 5,000 tons per year in deficit. We're about 24,500 tons we've been in deficit in the last 4 or 5 years. Now, China at the moment produces 70% of global silver, and they do this as an offtake from copper, zinc, and lead refining. So what happens as an outcome of those 3 metals being refined, you end up with a silver slag. And what they used to do is send that silver slag to Switzerland and Mexico and places where there were silver smelters to take it the last mile so that it would turn into silver. Now, what the Chinese have told us they're doing, through their licensing regime, is they've said, well, we're going to keep the silver from now on, and we'll allocate the silver depending on what your project is. Now, there's about 25 to 50 grams of silver in every missile, right? And, that silver you can't recycle. There's that kind of grams of silver in every PV, solar cell. So what happens is we go from a deficit of 5,000 tons of silver to my guesstimate is about 13,000 tons of silver deficit that we have to get out of vaults because it's a deficit. We have to get it out of the vaults. We have to get it out of people's cutlery drawers if we can, or the price goes up, right? And the price goes up, it's inflation again, because then, defense can't afford not to buy it. AI data centers can't afford not to buy it. So you end up with the organizations that can't afford to buy it, dipping it. And you've got this happening, that's an example, but that's happening in every rare earth metal like gallium. Now, gallium, there's a new kind of weapon. It's called a microwave energy weapon. There's a company called Epirus. It's a startup that makes them, but there's about 10 companies manufacturing at the moment. But if you go to Epirus, you can see them in action. They've got some good videos. Now, what they do is they send out a sudden, very high voltage, high amp signal, microwave signal into the atmosphere. And anything that's electronic, like a drone, just falls out of the sky, right? Missiles, etc. So they're like the modern force field. Now, the West plans to manufacture a lot of these because they're pretty useful against these new drone warfares. But guess who makes 98% of the gallium? It's China. And guess what they've said? They're not going to, and they did this to Japan the other day. They said, well, we're not going to export gallium to you guys because you're just going to make defense weapons and make it easier for you to defend ourselves. So it goes back to, just common sense. When we talked about tantalum allows you to compress electrification. So it separates high voltage power. Now, tantalum mostly comes out of Congo and Rwanda. That's 60% of the market. Now, you can imagine the contention, geopolitical contention over Congo and Rwanda by China and the US, now that tantalum is the core production house of the world. Now, we're going to get different, we're going to have to look for separate supplies, but, I think I went through 23 critical metals, so I see that as a red line, and chemicals and gases and all those kind of things. It can include helium and all those kind of things. They're all under contention because everybody knows how important they are. So geopolitically, I compare it to conjoined twins that have got their hands around each other's throat. They're unaware that they're joined together at the hip, and they think they can prevail against each other. And what we're watching is a very integrated world trying to dismantle itself and deintegrate itself. And I don't think they'll ultimately be successful. My hope is that this integration is so hard, complex to pull away from that they eventually work out how to cooperate.
That paints definitely a really vivid picture there. I want to go back and talk a little bit more about silver because it's of pretty strong interest to our audience. You mentioned we've got the growing deficit. We've got these industrial and military applications that are using up silver right now. And yet I think a lot of people are wondering, especially right now, we've seen the price go down since the war in Iran started after the all-time highs earlier this year. So what do you make of that price activity? Is that something you see resolving at some point?
I see it as a buying opportunity. I think the reality is we watch price too much. And if you listen to any of the great investors, they don't watch price at all. And so it's a weird kind of mindset that you have to get to understand the markets. You look at people like Druckenmiller, or any of the greats, they don't invest on price. They use that as a signal to enter the market, but they're basically committed to their investment thesis, or they change their investment thesis. Soros is a controversial figure, but he shouldn't be controversial on the investment front. He was one of the genius investors of the last 4 or 5 decades. And, one of the things he repeats is, I always want to know when I'm wrong because I always want to be the first to know when I'm wrong because that means I can contain my losses. Now, you look at the plans of the world, in particular silver. The plans of the world, we've got industrial usage of silver going from 43% to, in the last 4 years, it went from 43% to 58%, I think it is this year. That's a massive climb for an industrial silver in 4 years. And then when you look at the forward projections of how much silver they're going to use in industrial applications for the next 10 years, it becomes ridiculous. And then you look at the constraints that China holds over silver because, they hold 70% of current production. Then and you start to realize that we're in what I call the two ledgers, the financial economy and the material economy. If you look at the CME and the LME, the London Metal Exchange and the Chicago Metal Exchange, there's only, somebody should look this up because I haven't looked it up for a while. There's only about 5% of contracts actually go to delivery. right? Then you look at the Shanghai Metal Exchange. It's like something like 95% of contracts go to delivery. And when you think about it, it makes common sense. The Chinese are building stuff. We don't build stuff, so we use the metals exchanges as speculative places that don't deliver materials, and they use the metals exchanges as trading areas to deliver materials. And so we're getting this bifurcation between metals exchanges, not limited to the fact that the London Exchange was bought by the Chinese anyway. And so you end up with this chokehold. So I think the reality is that metals are absolutely central to everything that everybody is planning. And the idea that because a price signal has been quite negative, it's very hurtful that people have just bought in. But people like I've been in physical copper and silver from I think $12 and $700. I don't even notice it because it's, as far as I'm concerned, it's a normal correction. But for people who have just gone in, you just have to buy and hold, and the price will go up. And ideally, it's physical. I don't think buying paper silver on these metal exchanges is actually telling us anything, especially the Western ones. If you buy on the Shanghai Metal Exchange, you not only have to put higher premium down for the option, you've got to actually pay at different stages before your expiry. So you're actually almost paid up. You don't get this deterioration in theta on the option, because the deterioration happens because you've had to trump up more money for the option as you get closer to delivery to see if you're serious.
I think that's a healthy way to look at the price action. That helps a lot going into it. I don't want to keep you overly long. This has been really valuable, but before I let you go, I wonder if there's anything else that you would say in terms of how you're positioning as an investor, given the circumstances that you see playing out. Because I think that's a question that many people will have after hearing all your thoughts on the world.
Yeah, I would look at innovation very, very carefully. I think there's I'm on NDAs, etc., from different companies on innovation. The innovation that's coming through is spectacular. I think it'll change the game. So there's companies that are innovating ways of refining metals, about discovering metals. There's companies like Ivanhoe Electric who've worked out ways through their Typhoon system, and that's only one of their technologies, that they can discover significantly more metals. Like we used to drill, and then take a sample of that drill to understand what the deposit was. Now we can send currents of electricity from one point to another and discover it all at once. Those kind of technologies will significantly accelerate our ability to find things. So I don't think all is lost. I think part of, for instance, there's a $355 million tender gone out by the Department of Energy in the US for the reprocessing of coal ash. Now, coal ash sits in the billions of tons next to the old coal-fired power stations. It's like a really fine black dust. And if you extract, every ton of coal ash has like 7 kilos of titanium, and it goes on and on and on. So you're going to get a circular economy out of this. And this is the evolutionary, pressure or constraint that's being put on us, so that we invent those things. So we just don't go about the things how we used to. So it's good news in the long run, but in the short run, it's going to be mayhem.
Yeah, well, I'm glad we end on a positive note of it'll turn out all right on the end. Anything further you would add, or is that the right note to wrap it up on?
I reckon that's cool.
Amazing. Well, thank you so much for coming on. It was great to have you. I learned a lot. And once again, I'm Charlotte McLeod with investingnews.com, and this is Craig Tindale.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.